Okay, Assalamualaikum warahmatullahi wabarakatuh. Today we are going to look at employment income. Okay, the third topic in our course outline. Okay, under this topic, employment income, it will cover 3 chapters. Okay, from the textbook, chapter 5, 6, and 7. So what we are going to cover from these 3 chapters will be, you would learn about definition of employment income. So in other words, when you are given different types of income, then you know that by looking at the criteria that fulfill to determine the employment income, based on the definition given, okay, from the law, from the case studies, and so on. So we will be able to determine that that particular income is actually an employment income, therefore it will be taxed under section 4B. Okay, remember back in the earlier in our earlier class, I told you about types of income. Okay, so we do have backdrop. Types of income is under section 4. Okay, it will be comprised of backdrop section 4A up until section 4F. Okay, so we start with employment income first, okay, and other sources of investment income. Then only we move on to section 4A, which is business income. Okay, so we will look at definition, how that income is actually fall under the category of employment income. Once we know that the income is employment income, then we want to know that income is actually derived from Malaysia. Okay, because whatever employment income received from outside Malaysia, which are foreign source of income, is exempted. And we also want to know the basis here. Okay, so it goes back to individual taxpayer. Okay, and then of course it based on the calendar year. The only thing is that now we want to see, because sometimes in the current year you might receive whatever income in related to the past or in related to the future services that you rendered for your employment income. So we want to know when that income or which particular basis year or year of assessment that particular employment income will be taxed. And then later on we will see types of employment income. Okay, types of employment income is going to have 5 subsections, which is covered under 13.1a up until 13.1e. And finally, you would have a format of tax computation for employment income. Okay, so that is what you are supposed to get after you have completed this particular topic, employment income. Okay, an overview of employment income. Okay, as I mentioned just now, so you need to know which chapter for which topic and so on. Okay, definition of employment income will be covered under chapter 5. And then types of employment income will cover in chapter 6, whereby derivation of employment income will cover in chapter 7. So these are the summary, what you need to know with regard to definition of employment income, what are the types of employment income, okay, when I mentioned just now 31A up until 31E, and derivation is section 13.2. Okay, let's look at definition of employment income. So when you listen to this presentation, please also make reference to your textbook, which particular para that I'm referring to, on which particular page. Okay, because you have to make sure that you are able to read also from your textbook, and then you're able to do your own notes. Okay. Now we are talking about definition of employment income. So now we are in chapter 5. We're talking about definition of employment income under para 1.1, employment. Okay. So when we're talking about definition, we always look at section 2 of ITA, okay, Income Tax Act. So under section 2 of ITA, employment income is actually defined as a relationship of master and servant. That means there is a relationship between master and servant. There is a master and there is a servant. Or sometimes you might not have a clear relationship between master and servant, but you earn your employment income by the way of being appointed or being appointed for an office, okay, whether it is public or not, okay, and that for that appointment there is remuneration that payable. Okay, for that appointment there is remuneration payable. Okay, for instance, of course, when we're talking about relationship between master and servant, it's like clear cut. Okay, you have employer and you have employee. So that will be employment income. Sorry, relationship between master and servant. Okay, what is example of appointment? Example of appointment will be uh, such as like you being appointed as a director of the company, okay, as a director which is a independent director of the company. So when you are being appointed as a director of as an independent director of a company, you are not part of the management of the company. Okay, however, when for that appointment you might still receive director's remuneration. Okay, you might still receive director's remuneration. So that remuneration is actually taxable under category of employment income. Okay, so you can be appointed as a director, as a chairman, as a secretary, okay, as a treasurer, whatever appointment. Okay, as long as there is a remuneration payable, therefore that remuneration will be taxed under employment income. Okay, so if we to refer to 1.2 employee. So employee here, it shows that there is a relationship between master and servant. And then that relationship, if there is no relationship subsists, holder of an appointment or office is constituted as an employment. Okay, that means that will constitute you as an employee. Okay, what about employer? It refers to 1.3. Employer is where you have relationship, okay, and normally employer is known as a person who is actually responsible to pay remuneration. Okay, employer is known as a party that is responsible to pay remuneration. Okay, so in example down there under para 1.3, you can see that factory master and servant example of when you work as a worker at the factory, okay, as when you work as a accountant, so that is actually being treated as an employee. All right, however, when you receive a remuneration by way of appointment such as director, executive, treasurer, trustee, etc., so that will be treated as an whatever income that you receive will still be treated as an employment income. Okay, so there are also some criteria that we might use in order to perform the acid test, whether whatever that particular person do, and by receiving income or remuneration from whatever that he or she do, is it actually employment income or is it actually business income? Okay, because in practice, all right, when you receive income, sometimes you might be questioned. Are you actually receiving employment income or are you actually receiving income but the income is not an employment income but that income is a business income? Okay, for instance, of course, you have two jobs. Okay, so the first job, what you do is that you have a full-time job, which you work from 9 to 5 as a security for a company. Okay, so as a security of the company, of course, you have actually relationship between master and servant between your security company that actually offer you the job. Okay, so that is the first job. Second job, you are also doing freelance of uh, you're also doing freelance of, let's say, drawing, for instance. Okay, drawing for blueprint design. All right, so of course when you draw the blueprint design and people will pay you. So when people pay you, that the amount that people pay is actually income. So is that income should be treated as an employment income or should that income be treated as a business income? Okay, so this is where the acid test is actually to differentiate employment income. Okay, sorry, the income is either contract for, which is business income, or the income will be contract of, which is section 4B. Okay, so all the principle is actually extracted from the case study. Okay, because we under the Commonwealth, whenever we in the tax law, okay, whenever we conclude certain case or whatever, normally it will be based on preceding cases. Okay, what are the findings, what are the judgment from the preceding cases? Therefore, we derive the criteria on top of whatever criteria that have been set up in the Income Tax Act. So in the criteria, it shows that for the acid test, okay, we do have criteria of control, ownership of tools, chance of profits, risk of loss, substitution of staff, contract of engagement, nature and remuneration, benefit. Okay, what does it mean by control? Okay, when talking about control, right, between business and employment income, which one will have greater control? Okay, all right, going back to the nature of the business, if you're owner of the business, okay, you would have full control of the business. Okay, you can control yourself whether you want to come to the office at 10 or even 4 p.m. or you don't want to come for the office that day. Okay, so in that case, you have full control of your business. All right, and then if let's say you are an employee, do you have full control of the what is this operation? No, right? You don't have the full control of the operation. So when there is an absence of control, therefore that might fall under employment income. So it's not only one criteria will fit straight. We conclude this is employment income. No, we would actually determine many other criteria, and based on all these criteria, then only we decide whether it would be biased to the business income or it would be biased to the employment income. Secondly, ownership of tools. Okay, when you go to work, all right, you have computer, okay, you have phones, you have printer. Is it all yours or is it belong to the employer? Okay, it's very clear cut. Normally, all these assets are all belong to the employer. Okay, so in that case, you did not belong all those things. Then, in that case, you actually fall under the category of employment income. Chance of profits. Okay, chance of profits. So when you work as an employee, do you have the chance of profit? Okay, is it easy for you to gather your own profit? No, right? Okay, because normally the one that in the business is the one that have the feasibility, okay, or authority to guide for the profit. Okay, how much profit that they want. Okay, higher or lower, etc. Okay, so that's in terms of chance of profit. In terms risk of loss, of course, if the company goes bankrupt, okay, if the business goes bankrupt, what will happen to the employee and also employer? Of course, everyone uh, lost their job. Okay, however, for the business, okay, for the business, what would they lose? Okay, you for employee, you just lost your job, but for the company, you lost everything. Okay, so in that case, the risk of losses for business income will actually be more compared to. So we look at the risk exposure who have higher loss. Okay, substitution of staff. Okay, when you work as a boss, okay, owner for a company, do you think you have the right to substitute, okay, your job? Okay, today you want to do HR, tomorrow you want to do accounts, and then after that you want to do marketing. Okay, you have that right. Okay, you have the right to substitute the staff. Okay, however, if you are actually you are an employee, will you be able to change? Okay, today you want to do marketing, tomorrow you do human resource, etc. Okay, so in general, in practice, normally, okay, when you are being already designated for a particular position, you will be in that position for a while until later on you'll be promoted to other job, etc. Okay, contract of engagement is one of the most clear point where we can know whether is it actually employment income or is it actually business income. Okay, when you as an employee, you get an offer from your employer. How do you know you get an offer? You get the letter of appointment. And normally at the back of letter of appointment, there will be acceptance letter. That means you already signed. Okay, we apply, then they give you the details, and then you already sign that you agree to accept the job. Okay, Alright, so when there is a clear cut that there is a contract, okay, binding offer and acceptance, therefore then we can actually determine is it what kind of contract, so is it employment income or is it business income. Of course, if you have clear cut contract of engagement, then it will be employment income. Okay, nature of remuneration and benefits. Normally, if you are an employee, okay, you already being stated in your offer letter how much will be your benefits, how much will be your remuneration, etc. Everything has been more or less spelled out. Okay, but of course, from year to year, your salary also will be increased. Okay, simultaneously, that also will be increased. Okay, so those are the criteria, some of the criteria that we often officially use, okay, in practice in order to determine whether whatever income that you receive, okay, therefore that particular income we can actually determine based on all these criteria. Okay, why is it important for us to know whether that income is actually business income or that income is actually employment income? Okay, because every types of income would have their own benefits. In other words, they would have their own deductions and they will also have other relief that been given to that particular employee, okay, or the particular income. Okay, in the case of business income and employment income, of course, in order to generate that income, you would incur certain expenses. And these expenses actually can be deducted. But of course, there are conditions that we need to follow. Okay, so in general, before this, whatever deductions that you have against your income can be deducted. Okay, but of course, for the business income, you would have more. Okay, you will have more expenses to be deducted. And another thing is that whatever excess of whatever excess of expenses over income would actually be recognized as loss, and it will be it will not fulfill the requirement of section 4B, which is employment income. Okay, so that is for deductions of rule. So for deductions of rule, for employment kind, you have some deductions, but normally the lists are not that long enough. Okay, not that many in other words. And then for the business, whenever you buy assets, okay, you buy car, you buy factory, etc. So all this expenditure can be claimed as a capital expenditure. Therefore, you are allowed to claim capital allowance. Okay, so capital allowance is actually aimed to further reduce our tax payable or tax liability later on. Okay, and then for the deductions on monthly basis, okay, for individual or employment income, you would have scheduler tax deduction, but for the business, you would have monthly tax deduction. Okay, and then of course, for the individual, you have EPF contribution, okay, inside your salary. So that EPF condition, that monthly deductions can also apply for the company, okay, where they have monthly installment. Okay, again, for employee, you would have another compulsory deductions such as EPF and also SOCSO. Okay. And then apart from that, of course, when you work as an employee, okay, you would have extra benefits that given to you, such as medical benefit, sick pay, leave pay, which is during all this leave, your salary is still being granted. Okay, so do we actually tax this particular portion of salary or not? Okay, so that is what we want to know from definition of employment income. Okay, and then also if you have received compensation for the loss of employment, there are also some exemption which is actually being given. Okay, so there are some pros and cons. Okay, whether should it be better be business income or should it be better be employment income. Okay, now we move on to, so just now is definition. Okay, now we move on to derivation. Okay, derivation is actually under chapter 7. Okay, derivation is actually under section 7, chapter 7. Okay, if you open to chapter 7, the first part, okay, which is para 1.0, okay, which is only from page 1 to page 144 to 146, okay, 146 or 145 is the one that mentioned about basis period. Okay, so this is actually to govern, okay, this is actually to govern the, no, sorry, this is basis period. Okay, basis period. So when talking about basis period, okay, we are talking about the period in which employment income is received and it will be taxable for that year of assessment. Okay, so as simple, it's become simpler nowadays. Okay, and it based on section 25. So last time we used to have like 6 subsection, but nowadays the 4 has been deleted, only left with 2 section which is still effective. Okay, section 25 subsection 1. Okay, talking about basis period. Okay, here is mentioned that section 25 subsection 1 provides where gross income from an employment is receivable in respect of any particular period, it shall, when received in relevant period, be treated as a gross income. Okay, so in other words, section 25 subsection 1, what actually it says that employment income is fully assessed on receipt basis. Okay, it's not attributable back to the previous years of assessment. Okay, because last time is different for different year of assessment. So now it make it easier. Okay, whenever you receive in January, whenever you receive that income in that basis year, therefore that income will be taxed under that basis year, regardless whether it is previous or past. Okay, and then the next one, section 25 subsection 6. This is actually refer to gratuity, one of the item in section 1A. Okay, so here is actually refer to gratuity leaving Malaysia upon cessation of employment. Okay, so there are certain treatment for gratuity. Just take note, later when I explain in 13.1A, I will come back to this, which is how to treat the income received from gratuity. Okay, now move back to derivation. Okay, how do we know that employment income is actually derived from Malaysia? Okay, derived from Malaysia. Therefore, when it is deemed to derive from Malaysia, therefore it will be taxed in Malaysia. Okay, so the most important thing is that what we learn when we're talking about income, the question is it taxable or is it not taxable, and is it taxable in other based on the sources of the income or what? Okay, all right, now we move on to derivation. So derivation is spelled out under section 13.2. Okay, under section 13.2. Okay, so section 13.2, what does it say? Okay, and also section 13.3. So two sections that actually explain about derivation of employment income. So if you refer to para 5.0, page 78 is talking about derivation of employment income. Okay, is deemed to derive from Malaysia under section 13.2 and 13.3, and employment income is received in Malaysia from outside Malaysia by a resident individual. So this refer to foreign source of employment income. So the first one, okay, employment income para 5.0, number 1, employment income is deemed to derive from Malaysia. Therefore, it will be section 13.2 and section 13.3. So these are Malaysian sources of income. And then another one, employment income you receive in Malaysia from outside Malaysia. Why you receive employment income from outside Malaysia? Because your boss or your company is actually located in overseas. Okay, but you are still work for that company. Okay, your salary is still paid by that company in Malaysia because you can work from home using computer and so on. No need for you to be present in the office on daily basis. Okay, so for that matter, whatever employment income that received in Malaysia from outside Malaysia, so this actually refer to foreign source of employment income. Okay, it refers to foreign source of employment income. So then we know how to treat that particular income. Is it Malaysian source or foreign source? Okay, the next one when talking about legislation, okay, under section 13(2)(a). Okay, section 13(2)(a) refer to para 6.0, page 79. Okay, employee is deemed to discharge duties as required by employer in Malaysia. So meaning when he or she exercise his job, okay, employer give you instruction what to do and so on, and you exercise your job here in Malaysia. Okay, when you exercise your job here in Malaysia, therefore the place that the income is deemed to be derived from will be Malaysia. Okay, so that is 13(2)(a). So the source of employment income for 13(2)(a) will not be a big issue. Okay, will not be a big reference because we are actually looking at where you receive because you exercise your work here in Malaysia. Okay, 13(2)(b) para 7.0, page 80. Okay, 13(2)(b) is actually referred to when you take leave and this leave is actually being granted due to your job in Malaysia. Okay, due to your job. Okay, whenever you exercise your employment. Okay, and you get leave. Okay, leave pay, study leave, whatever kind of leave. But during the leave, you still get your employment income. So this employment income, though you are still on leave, will be attributable to employment that you exercise in Malaysia. Therefore, that income is also be taxed in Malaysia. Okay. Alright, now 13(2)(c) para 8.0, page 81. Okay, 13(2)(c) is actually talking about you receive your employment income but you might be actually working outside Malaysia. However, your job outside Malaysia is actually incidental to your job in Malaysia. Okay, incidental. Let's say for instance you work in Malaysia, right? And then during the year you are being seconded to another Asia country, and you work for, let's say, for 5 months over there. Alright, and during these 5 months you work in Hong Kong and you still receive your salary, okay, from your employer in Malaysia. You might receive in your bank account in Malaysia or you might receive in your bank account in Hong Kong. Okay, regardless wherever that you receive. However, why you receive that employment income? You receive the employment income is because you exercise your work in Hong Kong, which is incidental to your job agreement, okay, in Malaysia. Therefore, for that 13(2)(c), okay, you are deemed to be taxed in Malaysia. Okay, and then 13(2)(d). Okay, 13(2)(d) is actually referred to para 10.0, page 83. It's actually referred to remuneration received by a director of a resident company will deem to be discharge your duties in Malaysia. Sometimes you might not be present in Malaysia because maybe perhaps you attend your online your board meeting via Skype, via online. Okay, so regardless whether you exercise or not, but the moment your fee is actually being paid by the Malaysian resident company, therefore that director fee will be deemed to be taxed in Malaysia. And then last one, 13.2e, which is para 11.0. This is specifically referred to employees who are who work for a resident company in the industry of specialized industry, okay, such as banking, okay, sea transportation, air operators, and also takaful or insurance. Okay, so these are the four industry where the scope of the employment income is based on world scope basis. Okay, so that is in relation to how we know whether that employment income actually is deemed to be derived in Malaysia. Okay, so the summary of the charge for this one will be, you can refer to charge 5.1, page 91. Okay, where the summary of all the key concept, okay, or key terms from each particular section. Okay, and last but not least, you have please read exemption of employment income under para 21, 22, 25 of schedule 6. Okay, so under this exemption para 13, it does mention that, okay, if you're a foreign or non-resident person come to Malaysia and you exercise some work and so on, or employment duties less than 60 days, therefore the whole employment income that you receive would be exempted. Okay,